Bubbles. Defined as periods of high speculation where the price of something completely exceeds its intrinsic value. Currently, we're in a market like nothing we've ever seen before. Some people say that we're in a bubble right now. But how would we know? From the inside looking out, everything just looks normal. In this video, we're going to ask the question if we're actually in a bubble right now. We'll look back at bubbles from the past, compare them to the times we're in now, and I'll give you my opinion if I think we're in one right now. Is everything really just going to go up and continue in the green? Or is there something dangerous looming around the corner, ready to pop? Let's first have a look at what's happening right now in the different asset classes and markets around the world. Firstly, let's look at the stock market. Seemingly every single week, the S&P 500 keeps breaking new all-time highs. There nearly can't be a week that goes by where new all-time highs don't get tested, and we seem to be in this place of the only way is up for the stock market. If we actually take a slightly more in-depth look of where this growth has come from in the S&P 500, we'll see that this growth has come from a multitude of different industries. Energy leads the way, with tech coming in a close second, followed by financials, consumer discretionary, and then services. Even the weakest performing industries haven't lost money. Utilities has the worst performance and it's still in the green, up 4.28% so far this year. Now, what about property and real estate? In the UK, an average house hit £270,000 just a few days ago. Now, that's not going up everywhere. London's actually the odd one out here with a slight bump of only increasing 0.8%. Other places, however, like up here in the northwest, prices have risen and seen an increase in the double digits. That's according to data from the Halifax, with price increases here with over 10% over the last year. Over in the US, their housing market is also going crazy, with the median house price now just topping over $400,000 for the first time. Again, more crazy all-time highs this market has never once seen before. Not enough supply and low inventory, with plenty of swarms of buyers who want to get out of cities, have more space and more land, especially since the year that we saw back in 2020. This has fueled a boom in buyers, and it doesn't seem to be letting its foot off the gas anytime soon. Outside of these markets and the stock market and real estate, what about the other markets like commodities and cryptocurrency? Well, no surprise here at all if you've been keeping an eye on things. These markets have also gone a little bit crazy too, fueled by some crazy demand and not enough supply. Oil prices soared over the past few months, causing fuel prices to hit new record highs. Lumber's come down slightly from the highs in May, but still sits near numbers it's never seen before. And metals like gold and silver are not quite at all-time highs, but still seeing strong price action, which leads us onto our final asset class, cryptocurrency. This one's performed completely out of this world and has cemented itself as the last 10 years as the asset class which has increased the most in value. As you watch this video, you would have seen that Bitcoin and Ethereum, for example, have just hit all new all-time highs, and of course, plenty of altcoins are also joining them on that journey. Okay, look, so we've covered a lot, and what does all of this mean? We know that things get expensive every single year with inflation, so is this just inflation taking a bit of hold, or is this something a little bit more? Are we actually in a bubble? Well, one of the only ways we can see if we're in a bubble right now is to try and look back at the past and see what lessons we can learn and see if we can see any similarities to what we're seeing today. One of the craziest periods of price speculation actually took place here in the UK back in the 18th century. It caused so much trust and so much pain that it actually ended with Parliament passing legislation called the Bubble Act. You literally couldn't write this stuff. To cut a long story short, this is the bubble of the South Seas. It's one of speculation, hype, FOMO, and the madness of the crowds. The South Sea Company effectively took on the government debt in the UK and then sold shares back to the people with the promise that it was going to generate untold wealth trading across the world, just like the East India Company had demonstrated before them. But here's where the story took a little bit of a turn and actually became more one just based on hype and imagination rather than actually realities on the ground. At one point, even King George was the governor, giving the company amazing confidence and made investors of all shapes and sizes go crazy for this stock. During its peak, the price rose from nearly £100 a share to £1,000 a share, which is equivalent in today's money of around £200,000 per share. Absolutely crazy. It makes Tesla look pretty cheap. As with all bubbles though, once it got too big, it eventually burst. And in the summer of 1720, when news began to spread that this company wasn't actually doing anything at all and it was all based on hype and speculation, things took a turn very, very quickly indeed. And this wasn't just stupid people falling for this scam either, this was very, very smart people, even Isaac Newton himself. Clearly the falling apple that came from the tree may have hit the part of his brain which has to do with analysing stocks and not getting caught up in speculation. Okay, so clearly people were very stupid in the past, but surely in the modern times with all the education we have, all the amount of information, the medicine, food, We must be a lot smarter now, right? We've got access to all of this amazing information. Well, not so fast. Everything from the dot-com era to the financial crash has shown us that we are liable, as ever, to get greedy and not learn from the lessons of the past in terms of bubbles. Falling for getting rich quick schemes seems to be a pastime of humanity, and I don't think that will stop anytime soon. So as long as people want to acquire more money, there'll always be someone else there to take it. Only last week did we have a new hype crypto token based on the popular TV show Squid Games, which had nothing at all to do with the show, capitalised on its name, got an amazing amount of press coverage, shot up thousands of % in value, and then of course it all ended in tears. I mean, what could go wrong with something which you could buy but couldn't sell, and something which was based on a TV show? It sounds like a perfectly good investment. Anyway, it turned out to be a huge rug pull. The investors, which I'll use in the very loosest set of terms, lost all of their money, and the perpetrators made off with all of their money, and I'm sure they'll probably start a new token very soon. Watch this space. So after a quick journey through the past, can we say that we're in a bubble right now? This one's a really difficult one to say, but in my opinion, no. At least not just yet. I don't think we're in a bubble right now, but I do think we are in an extraordinary set of circumstances which are all colliding, causing to see the asset price inflation and the different prices squeeze in the markets that we've never quite seen before. Years of low interest rates, high levels of borrowing, money printing, all the supply shortages, high consumer demand, everything's playing its part. I don't think there's a single thing which you can put your finger on which is actually causing the asset prices to go up. And one of the reasons I wouldn't say it's a bubble is because we're not necessarily seeing a single sector getting that huge boost. It's actually everything being risen at the same time and everything being inflated to near all-time highs. So if you did see maybe a single asset class just only rising and everything else not doing it, like real estate for example, then you might be able to say that's a bubble. However, because everything's kind of going up in the same direction, I don't think it's quite that clear. And I do think that the demand is real and companies are delivering real profits, as we've just seen from the Q3 earnings seasons. Lots of major, large companies, the big tech giants, are still delivering whopping revenues and whopping levels of profit, so their values aren't just based on pure speculation. And really the only thing holding companies back at the moment seems to be supply chain shortages, so the demand is there and the money's there. So although growth might slow down and of course we may never see a bull market like the one we're in right now, who knows what could happen in the future? We could be on the cusp of a technological revolution where really we could see some more accelerated growth past nothing we've ever seen before. Sure, we're overdue a crash, we're overdue a correction, but timing means absolutely nothing. We do not have to have a crash, we do not have to have a correction in any set number of months or years. This could only be up. Only time will tell. I'm not going to be the one to go and burst your bubble, so we'll just have to wait and see. Anyway, thanks so much for watching the video. Drop me a big fat like if you found it useful or interesting. Subscribe for many, many more. I'll see you guys in the next one. And as always, happy investing.